So it's interesting how the market is always shifting from literally 1 month to another. And not even a year ago, the multifamily reached a high point in prices, cap rates, the lowest. And it appears to me that multifamily is on sale right now. There's deep discounts going on. What are you seeing in the market right now?
Yeah, so I'm seeing that there's a lot of elusive deals out there. So you're still seeing a ton of a gap between what people are willing to sell for and what you can buy for. But there are some crazy deals right now in the market. The deal that we just picked up is on a 30% discount. It was literally under contract in the beginning of the year
Mm.
for 35 million, and we're picking it up for under 25 million right now. So I cannot tell you how exciting of a time this is, because we've been just competing on other deals that had a lot of value add on the backside of them, and they're still great assets over the last couple of years. But now you're just seeing this huge drop off in price, and it's a great time to get in and buy a multifamily property.
I got two questions. The first one is, why is there such a drop off in price? And the second one means that, like the market, there's been a drop off in the stock market, and there's really no guarantee it's going back up again, right?
Mm-hmm.
So the first one, why was there a drop off? And then why do we think it might even go back to where it was, a little bit less than a year ago? So first of all, what explains this gigantic rapid drop in valuation?
Well, if you look at what happened in 2022, interest rates rose at the fastest rate in 40 years. So that shocked all the banks. It shocked the market. Every time you turn around, there's a 75 bip increase. That's scary. So you're not able to get as high a leverage. Your interest rates are not allowing, certain deals to cash flow that once could at a certain point. So the only way to offset it is to lower the price so that things can trade. And that's the main reason. I think also probably increased construction costs on value add properties. That's also a factor, not quite as heavy, but everything combined, the main source of this is just that interest rate hike. And we're seeing things cool down a little bit. They're, starting to shift back down on the treasury side. But so you have this window right now where prices just dropped off a cliff for a minute. Jump in. We can't tell. Maybe the interest rates are going to continue to go up and there's going to be further discounts. Or maybe they're going to come back down and prices will adjust back up the other way. We don't really know, but we know right now is hot. If you can land some right now, you're in a really good spot.
Well, why do you think there's a temporary blip on the radar, right? I mean, people could argue, look, as long as if the interest rates stay where they are, which they're likely to stay, why would prices ever go up?
They would. I think they would only go up if you start to see the Fed lower rates. In that, if they're going to stay where they're at, and that's your prediction on what's going to happen, you should see further decline, because what's happening is people that have the short-term loans, they're going to have to re-up those short-term loans and either extend, and maybe they don't qualify for the extension because they can't operate it properly, or maybe they can't afford the cap payment. So you will see those deals pop off as the longer this goes on. If interest rates go down, those people might get saved. If they go up, then you're in an even worse spot. You're going to see even more deal flow come through, I believe. So the thing is, a lot of these bridge loans, they started out, like a year back, so they're not really coming due yet. So you're not seeing a ton of chaos quite yet, but it's around the corner, and there's a higher likelihood that things stay where they're at or go higher. So that's what you need to look at is, hey, who do we know out there that maybe is in this predicament? It's not talking about it. Maybe we can look at some of their stuff, make some offers behind the scenes on deals.
Yeah.
Where we know that this is a problem.
I think another factor was it wasn't just the rise in the interest rate. It was literally, and you hinted at it, it was the lowering of the loan proceeds from lenders because of the rate with which interest rates came up. So the LTV went from 75% to like 55, like overnight.
55,
boom.
Yeah.
And now no one can buy any kind of deal anymore.
Yeah,
and so
your DSCR restrictions are much,
that's right.
Much lower.
Now, let me ask you this, though. If rates were to stay the same and they stabilized, wouldn't LTVs slowly start to normalize back up to 75% at a higher interest rate, of course, but it's the LTV that crushed a lot of the prices.
Yeah, the LTV is directly correlated to the interest rate because they have a debt service coverage ratio requirement on all deals. So that's really why they came down. But there was also a shock to a lot of these banks. So yeah, what will probably happen is even if they stay the same, they may bring the leverage back up a bit and lower the DSCR requirements or something along those lines. It could also stay down. So that's really why that happened.